Hey guys, hope you guys are having a great day today. I'm going to be discussing what's going on with SoFi. SoFi is down almost 8% today at $15.40. SoFi came out with the current quarterly earnings today, and I'm just going to kind of go through that. So SoFi fell approximately 9 to 10% following Q2 earnings. So the fintech delivered record-setting revenue membership numbers that beat Wall Street estimates. So they are growing, but there is stuff with EBITDA, full year profit, and the costs or the expenses of running SoFi. So despite the market sell-off, SoFi underlying business growth demonstrating strong momentum. Revenue beat, so revenue is surging 40% year over year, which is good for the rule of 40. $1.21 billion ahead of 1.12 billion consensus estimates. So they did kind of beat what Wall Street was expecting for that. Non-GAAP EPS came in at 12 cents, so they are kind of beating the expectations again. Record membership expansion. The company added 1.1 million new members during the quarter, which is really good. So they are expanding quite a bit, bringing its total user base to 15.8 million. Total loan origination, so historic high of 14.8 billion, up 69% year over year. So driven heavily by personal loan demands. Primary catalyst for the stock drop is a mismatch between expanding revenue and static profit expectations. Management raises full year 2026 adjusted net revenue to 4.85 billion, which is good. Full adjusted EBITDA at 1.6 billion and adjusted earnings per share at 60 cents. So they're keeping the earnings per share at 60 cents like usual. Anthony Noto stated that the company adjusted its internal forecast to prepare for 1 to 2 interest rate hikes this year due to what's going on with inflation and oil. So they are expecting a bigger rate increase, which will kind of help SoFi out. If you think of it like this, increased interest rates will be on increased variable rate mortgages, loans. So they are going to make a little bit more money off that. And marketing expenses jumped 48%. So they are trying to expand, and that is the main reason why their revenue kind of went down. That's the main reason why their earnings per share is still where it's at. If they didn't have that many as much expenses, their earnings per share would still start to skyrocket like usual. So what I'm expecting, and I always go back to the cancel model. So current quarterly earnings per share, they did hit that. Annual revenue or annual net income is increasing. New products, new markets, new highs. So they aren't lately. They haven't had any new partnerships. They did bring out new products. Supply and demand is the supply there for SoFi. There is other companies like Robinhood, Webull, Simple, even traditional banks, JP Morgan, Canadian banks as well that are going to undercut SoFi in some aspects. Leaders versus laggards. Is SoFi a leader in the market space? Maybe, maybe not. It could be a leader within the next 5 to 10 years. Institutional sponsorship is a sponsorship there. Well, obviously it is. Anthony Noto keeps buying shares up. Other, directors are as well, and market direction. So market direction is not there. So if you look at the cancel model, the cancel model is showing that SoFi is kind of hitting some of those targets, but not really. There has to be a bigger catalyst, like what I keep saying. There has to be a bigger catalyst for SoFi to do well, and their earnings per share or the quarterly earnings has to start basically skyrocketing. It's not skyrocketing at the current moment, so they are going through some, I would say some BS. Pardon my French. They are going through some BS right now, but in the later future, for sure, they will. Next round target is around $14.31. If it starts to go right back up again, it's going to be $16.12, and everything is a strong sell for the moving averages. So just wanted to make a quick video. I feel like SoFi, keep holding it. Dollar cost average, if you like SoFi as a long-term buy, maybe do some leap call options. Cash secured puts at the premiums are good for SoFi, and just kind of go from there. Again, I'm not a financial advisor, but anyways, have a blessed day. We have a few more days in the market, and see ya.